Okay, welcome back. In this class, we're going to talk about confirmation entry and directional bias. I explained all this to you so that my network was bad, so that's why I didn't get to combine all the class at once. So now we're going to talk about how to use confirmation entry and then a little bit about directional bias, so that when we come to deep in directional bias, you know what I meant. So we know that the two zones that we expect markets to react from, either supply zone or demand zone, is what you call, like, depend on what you called it. Yeah, resistance level or what support level. But I explained a demand and supply using this one, and I think you guys understand what I meant by all those things. So confirmation entry is like after market was overbought, market was bought from here. Let's say I buy this 10,000 share of this. This is silver. I buy 10,000 share of it. So for me to like go in my other field, I need to have sellers willing to what sell 10,000 what share, because this is how trade took place. This is how trading works. For me to buy 10,000, 100,000, I need to have what 100,000 supply people want to sell. And those sellers are waiting at these supply zones. That's why I explained this to you in a moment ago. So confirmation entry is like, we know that market is as discount at this zone, this breaker block and this other block, based on what I explained to you guys, right? So we know that these are the two zones we expect what this continuation of buy to happen, because we said what smart money cannot hide their what blueprint. The order flow must show anytime they want to enter, because they execute a lot higher orders. Because of those things, they cannot hide the order flow. So we take advantage of that order flow to know the direction where they want to drive the market, right? And this thing is determined by what? The amount of what shares they buy, because they cannot hide if they want to buy or not, because all of their order cannot get filled at one go. This is what I explained to you guys. So after we know where market is reacting from, where do we say we're looking for what? A confirmation entry. There's two ways I use what for confirmation entry. One of them is what? A market structure shift, and the other one is what? Sweep of liquidity. All of those I use them for what? Confirming what a market that really wants to sell from there or wants to buy from there. And based on our last class, I introduced you guys to market structure. We talked about market structure, we talked about market structure shift, we talked about liquidity, trade line liquidity, inducement liquidity, and then engineer liquidity. And then we talk about the two point of interest we use, which is the breaker block and the order block. Specifically, most of the time I use breaker block than what? Order blocks, especially for what? Continuation. But I use order block for what? Reversals. You guys understand? So I said there are only two zones we expect what? To have a market structure shift. It's either at the what? Demand zone or what? Support level, or a what? Supply zone or what? Resistance level. Any market structure shift we have inside this range, we don't consider it a market structure shift. It's just a what? Internet structure shift. And it happens when market what? Needed liquidity to what? Continue selling down. So most of you guys will what? Mark this as a what? Some like, this is the most annoying parts when you're teaching people. Anytime you say, okay, the last logo broken, this is where you get your market structure shift. So people will just mark this one and say, okay, I have a market structure shift right here, because this was the last high that break this structure. So this one is a strong high that break this what? This structure. So you say this one is the strongest high because it broke the structure. It did its job. The job of this one is what? To break the structure to the downside. And it did that, right? Like this one. Let me show you in the chart. I just hate like explaining this on this thing without in the chart. I rather use the chart. So as you can see from these zones, you know that market was break this high, this low. Let me clean this. Market break this low, right? Where is your strong swing high? Is this high right here? This is your strong swing high, and this is what? The order block that caused the breakup structure, right? You need inducement to protect your zones. I'm not going to talk about that because I just want to show you what you look for confirmation entries. We want to talk about diff on that when we talked about directional bias. So we know that this is the zone that broke the structure to the downside. But is it coming from a key level? Is it coming from a demand zone? This buy right here, this buy that come, this sell that come, is it coming from a key level or is it random? That's when you will be looking for. If it's coming from a key level, which is either demand zone or supply zone, that's how you can determine, okay, this is a very clean market structure in higher time frame. We're going to talk about that when we come to directional bias. Where is market is reacting from? The sell is coming from where? This failed OB, this failed breaker block, failed order block. So what I'm trying to explain this to you guys, so a market structure shift, I said, it cannot, just because you have this market structure shift inside this, and this buy is not coming from key level. This buy is not coming from key level, just like this one. You see, this buy is not coming from key level. This buy is not coming from key level. So even if market now break this structure to the upside, you don't consider it or what a market structure shift, because this buy is not coming from a strong zone that we expect markets to buy. This is the example of what markets telling you what this is not a valid market structure shift. So most of you guys just like anytime you have this kind of change of state of delivery, this one, you see a high, then a low, then this high got taken out. Most of you guys like just mark this as your what? MSS. As your what? Market structure shift. And this is very wrong, because I explained this to you in our last class. We said that we expect market structure shift to have to come in what? In a demand zone or supply zone. So most of traders will mark this zone as their what? Order block. They would expect markets to what? Come to that zone, and they look for what? Continuation of the buy. But they don't know that this is just a market to grab some liquidity, because if you read the structure in the what? Bearish trend, you have a breakup structure. This is your what? This is your demand zone. So this your MSS is just a liquidity to this breakup structure. Market will tap into that zone and continue what? Selling down. Did not respect this your OB. That's when a lot of traders will be like confusing. It's not something that's very hard to support. That's why I'm going to explain this, and I'm going to show you in the chart. I'm going to explain this, and I'm going to show you in the chart. Did I start recording this class? Okay, it's recording. So market structure shift is, we expect market structure shift to come at this zone. Any structural shift that we have now is just like a correction. Market grabs some liquidity to continue in the current direction, just like it do all of the times. So one of the most important things to understand is, first, when you get a market structure shift, the first thing you need to go back is to go back down to look for where market is reacting from, where market is coming from, where this buy or this sell is coming from. Do you guys understand? I'm sorry, guys. Let's continue. So a market structure shift, we expect market structure shift to happen inside a demand zone or supply zone. So this one is an internet structure, and this is just a liquidity to this order block. And market just take out the liquidity and continue to the current direction. Please, guys, excuse me, sorry. Okay. So one of the things I use mostly as a confirmation entry is what? A market structure shift. But where do you expect market structure shift to happen? In what? A demand zone or supply zone. So that means all of this that happened inside the current trend is just a trap. Market just grab liquidity to continue in the current directions. So market structure shift, I expect market structure shift to happen when market taps into a key level. Can be a breaker block and order block. Those zones that I explained to you about, this pale order block and then this OB right there. So market structure shift is one of the important things, is one of the most important things to understand when it comes to looking for what? Confirmation entry. This is just telling you what? A structure want to shift from that bearish structure to what? Bullish structure. Because if we have this zone, that breakup structure that we have now, we know that we determine this is our impulsive move. We know that correction move is coming, and correction move is coming is not counter trending. When we come to directional bias, I'm going to explain how we can take advantage of that trades. So those full back, we know that it's a correction move, but for higher time frame, those move doesn't end in 1 or 2 weeks. They will last for months, and that means those are the what? types of pattern market used to make. You can take advantage of those zones to what? Take the sell continuation again. That does not mean you're counter trending. Market is trending up, but market must what? Retrace back. This retracement in higher time frame is a what? Complete bias for lower time frame. That's why I'm going to directional bias has to be a what? Class of its own. Yeah. So let me go ahead and explain what I meant by one of the important factors when it comes to looking for what? Confirmation entry. I said one is what? A market structure shift. And where we expect market structure shift to happen is what? At a breaker block or what? And a demand zone. So when market was selling down, this is the kind of structure you want to see in what? Lower time frame. But you don't expect any market structure. Will not consider any market structure shift any inside the zone unless market tapped into this your what? Demand zone. When market tapped into demand zone, where we expect this continuation to happen, this order block or this what? This breaker block. Let me mark it. This breaker block or what? This order block. When market tapped into these two zones, that's where we expect these reversals to happen, the continuation of the buy. So this is where any market structure shift that will happen inside this zone is what we're going to use for what? Confirmation entry. So when market structure shift, when buyers stepped in and take out this high, so know that this is a valid market structure shift because it's coming from a demand zone from where we expect this what to come in. This is one of the most important sign I use for what? Confirmation that market really wants to buy. So when we have this one, then I go to lower time frame to look for my structure at the same zone. Do you guys understand? So this low, or that say what? Protected low. Why is it a protected? I'm going to explain that. But it's a strong low. You can just consider it as a what? Strong low because it breaks the structure to the offside. So know that this is a strong low because it did its job. What is the job of a strong swing low? Is what? To take out a strong swing high. So we know that. So this is our point of interest. This is our area of interest. This is where we expect what? This continuation of a buy to happen. And we have another failed OB, this zone. These are all of the point of interest we can use, or say area of interest we can use to take continuations. And we can use those based on the 4 guidelines I talked to you about. I explained in our last class. Those 4 guidelines, you have to consider those 4 guidelines before you can take a buy or sell at any of these zones. So I use confirmation entry at those zones, even when market tapped into these zones. So you see, market come and tapped into this demand zone, give us a market structure shift, but that does not mean I will just go into be looking for buys. I have to use a confirmation entry because I said this is my area of interest. That does not mean this is my point of interest. It's my area. This is where I expect this continuation of buy to come in. This OB is where I expect the buy to come in. So this is where I will be looking for my a confirmation entry. It's not like just market tapped into the high time frame, but that does not mean this is going to hold. Right? I need to see a confirmation entry. And the confirmation entry is the same structure I see for the higher time frame. The same thing when market comes to an order block. So when market come back and tapped into this zone now, and tap into this zone, this is where we expect okay, market already giving me a structural shift in a higher time frame, and now it come back to that demand that caused the structural shift. So that's when I will be looking for my confirmation entry. And the confirmation entry is the same structure at that zone, which is a market structure shift in lower time frame, give me a liquidity, and then take my buy continuation. This is a confirmation entry. And I'm going to show you inside the chart. So you see confirmation entry, that's mean like I have a confirmation entry in higher time frame, which tell me the bias, and then I have the confirmation entry in lower time frame, which tell me the direction where market wants to go. Because for higher time frame, this is a strong low, right? It's a strong low. Market will respect it because it's a very strong low. It breaks the structure to the upside. So this is a strong low. And when market come back and tapped into that zone, that will not just because high time frame telling me that this is a strong low, that does not mean I'm just going to jump in and start buying. That means I'll switch to lower time frame and look for the same structure inside that strong low for higher time frame. This is how we go.
May I ask a question, please?
What's the question?
It's always sorry. One time now, I had like I noted my supply and demand, and I had the market structure shift like in the higher time frame.
Yes.
After that, my inducement liquidity was very good, so I was waiting for the price to come back to my breaker block, you
Yes.
see,
Yes.
to continue the process. But the price never touched the price touched my breaker block, break my breaker block, and went to my other block. So it was just saying as if market was still shifting. When that happened, what do we like have to do?
If market did not give you what confirmation at the breaker block,
Yes, went also on the other block, but like it went again down.
and it come
Oh,
to the other block and it did not give you that confirmation.
see, it went like that. See, like, inducement went up. Okay, I know that is good. And I'm waiting for price to come here. It breaks, come up to come here before starting to buy.
Yes.
Am I the error?
Yeah, I can see. Okay, market
Wait.
come back and sweep the low again.
Yes.
It happened. That means this is just a what? Engineer liquidity at that zones. This is one of the one of the important things I will going to explain to you guys. It's one of the reasons I said we have two confirmations. We have the market structure shift, then we have the what? Liquidity sweep. This is called one of the what? Liquidity sweep. I'm going to explain that. It's one of the two confirmation we use. I'm just trying to explain the first one so that I'm going to explain the other one. So let me try explain it on the chart. This is let me try. Let me do all this. This is silver 2 hour time frame. So based on what we can see, we know that market is definitely what? Bearish. Market was what? Selling down. If we read the structure, we know that definitely what? Market was bearish, giving us a series of what? A low, a what? A high, and then a low. It gives us equal high, then another low. Sorry, a high, then another low. We know that definitely this trend for 2 hour, if you're using your bias, I can use 4 hours as my directional bias. You can use one day, you can use even 15 minutes. Even the trade I took yesterday, I think I shared on my TikTok. Even that one is what I use only 5 minutes as my directional bias. Then I use 1 minute for my entry. Same trades, same setup. So we know that currently, based on what you can see here, based on what I told you about directional market structure, you know that this currently is what? Bearish. So you want to see market tapped into a supply zone, you look for what? Continuation of the sell. So what do you see here? You see market tapped into this supply zone. That doesn't mean I'll just look for sales there. I need to go back and look for what? My confirmation. What do I look for confirmations? What's my confirmation entries? Is what? I see a market structure shift at that zone. And then give me that structure that I'm expecting to what? To see in the higher time frame. Even if you can support this, if you can see this one, let me try explain it to you so that you can understand. What do we have here? We got a breakup structure to the downside, right? This low caused this breakup structure to the downside. We do not have inducement liquidity, but we have engineer liquidity. What is engineer liquidity? I explained engineer liquidity. We said it's a liquidity. Market will come close to your point of interest, and instead of to tap into the point of interest, this is what needed liquidity. So it go back to the opposite direction, grab this sell side liquidity, and then come back and what? Take out the liquidity. We say a strong high is the one that causes a breakup structure. We know that you see this high break this structure to the downside. So we know that this is a strong high. This is a liquidity. And market come back and take out the liquidity. So instead of markets to use inducement liquidity, it's use what? Engineer liquidity. Let me explain what engineer liquidity is. We said engineer liquidity, when we have a demand zone that we expect, supply zone that we expect markets to come and tap into before we look for continuations. So market tends towards come to the zone, giving us a series of higher highs and higher lows. Come to the zone, close to the zone, and did not tap it, and then break structure to the downside. So we know that based on what we can see here, we know that this is a what? Strong high. Because what? It caused the breakup structure to the what? Downside. It caused this break. It breaks the structure to the downside. So now that okay, people will mark this one as a market structure shift. Just like I explained to you a couple minutes ago, people will mark this one as their a market structure shift. And say, okay, this is a market structure shift because we break a structure to the upside. Market did not tap into the original key label. That's why market will come back and sweep you out and tap into the original demand zone. That's when you expect another continuations to happen. You see, market sweep your zones, trap early sellers at these zones. This is the one of the example of what a market confirmation entry I use. The one that you try to ask question about, which I'm going to talk about later on the video. But this one is a engineer liquidity. Market just specifically create liquidity. We know liquidity is a high taking out a low. So this is a high, it take out this low. So we know that this is a liquidity. This is a strong liquidity. And liquidity is one of the things what market makers want to see before they take a buy or sell. So if you can see this one, you see it's a high and it take out the low. This is the low. It take out the low. So this is a liquidity. And market come back and tapped into the zone. Do you understand? Okay. So this zone, you know that is the strong zones to buy from because there's liquidity protecting the zone. Market grab liquidity and tapped into the zone. Though that does not mean I'm just going to rush in from this zone and started selling down. I cannot just rush into this zone because I see this liquidity and started selling down. People use that, but this one is much more risky because you don't know that markets really want to respect this zone. So that's why we use confirmation entry. And to use confirmation entry, when market tapped into our supply zone, high time frame supply zone, we go to lower time frame to look for the same structure. So let's try 15-minute time frame at that zone that market tapped into to know that do we have a market structure shift or sweep liquidity. These are the two types of these are the two types of confirmation we want to see. So if you come to the zone, let's read the structure. Based on what you can see here, this is the low, right? That take out this high. And now market break it and full back to give you inducement. Now you have 2 points of interest you can use to take the continuation. You have this breaker block. I'm trying to explain this because this one is the current price action. So that's why I just don't want to, because I don't want to go to back just old price action because it doesn't make sense. But this is what happened. I think they posted it or yesterday. This is 2 hour time, 15-minute time frame. So this happened on Tuesday. They posted it. So and these are the two zones you want. You have continuation of the sell. This order block and then this breaker block. Sorry. And then this breaker block. So when you apply all of those rules, those guidelines, you know that which one to choose. So you see market tapped into the original demand, take out this high to give you market structure shift at the lower time frame. This is where you get your MSS, market structure shift. And then market pull back to the zone and give you inducement. And it take out the low of that inducement, meaning that it validates this as a liquidity. This is what I explained to you guys about this one. I explained this about this engineer liquidity. For it to be an engineer liquidity, sorry, let me explain. For a zone to be for a high to be a liquidity, this high now, sorry. For this high to be a liquidity now, it needs take out the low it comes from. Where the low? This is the low that the high comes from, right? So for this high to be a liquidity, it needs to take out the high that it comes from. The same thing as inducement liquidity. So market must take out this high low to confirm this high as a liquidity. If market fails to do that, don't consider it as a liquidity because it's not a liquidity. One market just pull in a back a little bit and just go back off. Don't consider this as a liquidity. It's not a liquidity. You guys understand? So we know that for us to compound this as a liquidity, market must break this low that it come from. So we consider this as a liquidity. Market might sweep it and go back. The same thing, it happened when we want to see market tapped into our area of interest, which is the high time frame supply zone here. So you see, when we go back to the lower time frame, we got our market structure shifts, and this low is a liquidity because this is the high of the low. And now market come back and take out the high. Can you see? Give us a break. We know that this last low that caused the breakup structure to the downside. Market take out the high, give you this inducement, which is what the first pullback after breakup structure. And as you can see, this is the low of what inducement. This is the low. This is the low of the inducement. And market come and take out the low before going back to take out the liquidity. So to validate this liquidity, it needs to take out the low, and market do that to take out this low and go back and take out the liquidity and tap into your confirmation zone, which is what the breaker block. You see, so confirmation is not only keeping you safe, which is one of the most important things for us to consider when we want to look for confirmation. It doesn't always look for we use it to keep you safe, but also to maximize your risk to reward. If for me to take the buy, you took the buy from this supply zone, and I took the buy from this breaker block because of those rules that we have for us to choose the point of interest, right? So we know that this breaker block is the perfect one to choose from because it has all of the things we want to see based on our rules. So if for me to target this low, I go to, let's say, that 2 hour, because I know market is bearish. So the target of the market is the low. The low of the current trend. So if I go to, where is this one? Yeah. So if I go to, I know that this is the target of the market. For markets to maintain this current structure, this low is the target, right? This low is the target. So this is where I'm going to set my target. We're going to talk about all this when we come to bidirectional bias. That's why directional bias is going to be a very long and very interesting class. So you see, this is 1 to 30R. This is 1 to 30R. I took the trade using confirmation, and some other traders will use only this supply zone because they have liquidity protecting the zone. They'll took their trade at that zone and they'll target the low. You see the differences. This is 1 to 6R and my own is 1 to 30R. So that means their own is very risky to take the trade at those zones, because market did not give us that market really want to sell from this zone. That's one. And the other one is that it's maximizing my risk to into like more than 300% than his. His own is 1 to 6 and my own is 1 to 30. That's a lot of differences between us. So you see, confirmation entry that is not only helping you to save you from unnecessary losses, but also help you to get maximum risk to rewards. Are you guys following? Oh, why is it something?
I have a question.
Okay, ask.
Can I speak?
You said?
I have a question. Let's go back to how can you get this to what yours is 30 and his own is 6? I'm not understanding what happened.
Go to where?
Huh?
You said I should go to where?
Where your risk to reward is 30 and his own is 6.
Okay, this is the zone.
How come his own is 30 and yours 6?
You see, this one we took.
Meanwhile, it's almost
using confirmation. You see, it's 30.
Mm-hmm.
And then if you took the trade only using that higher time frame structure without waiting for confirmation, that doesn't mean it's not only like risky to trade, because market did not give you that it really wants to sell from the zone. And then you target the same zone that I was targeting. So you have to cover the order block that caused this that market tapped into. And you see, this is 1 to 6R. and my own is 1 to 30, and because I use confirmation, confirmation does not only what help me to take out to like avoid unnecessary stop losses, but also what helps to what maximize my what risk to reward. What is your question?
I was not understanding the sense, but now I'm understanding how what go. Because yours was having like good confirmation entry than you just took it like that.
Okay, let me give you another example. From here, can you see why the first thing I say you should what is know your direction, right? To mark your what direction. So you have this what break of structure to the what downside. So now you have a leg. We call this you have a high. This is the order block that causes the break of structure, right? So you want to see market tapped into this zone because you go break of structure, then you have a what inducement, if you can see it right here. Is you have two zones, but based on what I teach you about the picking up point of interest, you see you have this breaker block, but you know that this is definitely invalid because of what? Can someone answer me?
Why the breaker block is not valid?
Yes.
Because the inducement point entered into the breaker block, making it not to be
Very
valid.
good. Very good.
I
Because
think
inducement tapped into the what breaker block, that means is the automatically invalid based on the rules we follow to take out what our point of interest. You see, this is what a 15-minute demand zone. That one I give you example for 2 hours, right? We use 15 minutes for our entry. So this is 15-minute demand zone. That means we go to lower time frame than 15 to look for what? Our entries, right?
yes.
So we go to lower time frame. For 15 minutes, let me try 5 minutes. If we don't have good structure in the 5 minutes, we go to lower time frame than 5 minutes to look for that structure and what? Take our entry. So if we go to 5 minutes and come to that zone that we got tapped into to look for what? Confirmation entry, the first thing we're going to use is what? To look for our structure. In 5 minutes, you see, we don't have a clear structure based on what I can see. We have this high, and this is the low that caused the high. We have, sorry, this is the low that caused this break of structure. So when market take out this low, this is where we get what? A market structure shift in lower time frame. So you see the confirmation is not really clear in 5 minutes. So let me try lower time frame. Let me try 1 minute. Where is this? Where is the zone? Okay, this is the zone. Okay, look at this. Look at this. In 5 minutes, this is where you get a market structure shift, but this is not clear in the 5 minutes because if you mark this one as your market structure shift, this as your inducement, this is the POI for the 5 minutes. This breaker block is the one you're going to use for 5 minutes to go tapped into. But market did not use the 5 minutes as your what? Entry, right? So you have to go to lower time frame to look for what? A valid structure for each trade because this one is lower time frame for your bias. That means you're going to use lower time frame for your entry. The one I talked to you like yesterday, I used 5 minutes as my bias, and then I used 1 minute as entry on gold yesterday to get 1 to 16R. So if you can see here, you have break up these multiple lows. This low got broken, and also this low got broken. You don't consider them as a strong low because they did not break structure to the upside. So when market give you this one, like break this low, you have 2 point of interest you can use to. You have this order block, this breaker block that market tapped into when market wants to give you what? Inducement, engineer liquidity. This, sorry. Look at these two zones. We have a break, and then these are the 2 point of interest we can use, this order block and this breaker block. I give you how you can mark an order block. For a bearish order block, we say is what? Is the last bullish candle before the what? And then a what? A strong engulfing bearish candle what? Covering it. This is how you mark your what? Order block. So you see, when market give you this break, it pull into the zone and create engineer liquidity, give you a high and come back and take out a high because you don't have inducement. A market wants to buy from this zone. And this engineer liquidity tapped into this your order block, this breaker block. Actually, this one is a very risky to zone because you cannot like supporting this kind of move take a lot of time to practice actually. Take a lot, unless you have an experience, a lot of experience, you will only you be using this 5 minutes as your valid break because this is the high and market take out the high. But this is also one of the two things. If you understand market structure, and this you can do that when you've been in the trades for testing and for testing. So you see, this is the zone market tapped into, this order block. If you say, I said, if you do not have inducement, you always go, if you don't have liquidity, you always go to what? To the extreme. What is your extreme? Which is what? The order block. If I don't have inducement and I have two zones I will take my sell from, I will use the what? The zone that is extreme at the top. But if I have liquidity, then I will use the zone that is closest to that liquidity. And what is our overall target in this trade is what? The low. We go to higher time frame, which is the 15-minute, because this is the what time frame we use for our what structure. So we go to that 15 minutes to look for our what? For the low. Where is the low? This is the low for continuation because this is a continuation trade. You see, this is 1 to what? 25R. So if you use that zone only without waiting for confirmation, you can still get this risk reward, but it's not going to be a what like this one because you see this one is also what is 1 to 8R, but this one is what the other one. This one is 1 to 8, and the other one is what 1 to 25. So you see, this is the one. This is the one of the types of confirmation entry we used. It's the time for prayer. Actually, I need to go and pray because I want to talk about the other types of information entry, but I want to talk about it on our next class. Or when you have questions, write down the questions and then come to my DM, tell me so that we arrange another class before our next class, and I'll explain the one of the types of confirmation entry we use and then how we can take advantage of that. Let me recap what I said. I said the first thing we want to see is market tapped into a what? Demand zone or higher time frame key level, which is what can be a what? A breaker block or an order block, right? This, you see, market tapped into this breaker block now. So this is when you go to lower time frame to look for what? Continuation, to look for what? A market structure shift at that zone, confirmation entry, and then took the buy. Sometimes confirmation entry, waiting for confirmation entry can make you lose a trade, like miss a trade. But that does not mean you should not be using it. I use confirmation entry anytime. If I have 4-hour bias, I'll go to 2 hours and look for confirmation entry. If I get that, and I will go to lower time frame as soon as, again, I look for another confirmation entry. That's why all of my trades, you see them in 5 minutes, 10 minutes, or 15 minutes. Those are my entries. Even if my bias is 1 day, I have to refine and refine and refine it all the way to that zone just to get a maximum risk reward. So before we expect a market structure shift, we want to see market tapped into key level, demand zone or supply zone. When we have that, then we scale down to lower time frame to look for those structure that we want to see for us to take a buy or a sell. This is brief on what I explained about market structure shift, and is one of the what important things we look for when we want to see a market structure shift. Do you guys understand?
Yes.
Okay, so we're going to stop here. I'm going to go and pray. So we continue from where we stopped. Review this and write down all of the questions, guys. Bye.